Good day, everyone. Welcome to the new episode of Market Perspectives. And today we have with us Mr. Ashish Ranawade, Head of Product at Emkay Wealth Management. Good morning.
Good morning.
Welcome to the show.
Thank you.
So the market has been volatile during the poll phase. How do you foresee the outlook once the results are out?
So I think a lot depends on what the results are. So if we have a stable government at the center and if there is continuity, then I think the markets will take it positively. If there is a stable government but there is no continuity, there's a change in government, then a lot will depend on what the new government is, what the new policies are. So to that extent, there will be some amount of nervousness in the market. But the main factor, I would say, is whether the market perceives the new government to be stable. And if that happens, then I think we are on track for a good performance because the fundamentals of the economy are in place. And I think end of the day, it is the fundamentals which drive the market. So a lot would depend on that.
Global slowdown seems inevitable. Do you see our value opportunities for the investing in US or European markets?
I think globally, China will start doing better because some of the internal problems which China has with respect to real estate, I think are getting addressed. And when that happens, then we see China doing a little better. Asia on the whole is doing much better. So India is doing well, Vietnam is doing well, some of the East Asian countries are doing well, Middle East is doing well. So I think these are the economies which will start to perform, and then you'll see interest rates falling in the US, and that would kind of give a boost to the US economy. And then by and large, as interest rates come down, and this is what we are expecting over the next 1 year, when that happens, then you will start to see the global growth rates also picking up. I think the big problem as far as global growth is concerned is going to be Europe, because structurally Europe is in a problem, and to make matters worse, you have a war there between Russia and Ukraine, so that is causing issues. So by and large, we see the next 1 year to be the year where you will start seeing consolidation and then growth picking up globally.
So within the Indian investment universe, which pockets of opportunity do you see for investors?
So from a pure asset allocation perspective, we would still put our bet on equity. If we do see a stable government and a continuing government, then the next 5 years I think would be good for equities. Fixed income, and especially fixed income at the longer end, as interest rates start to move down, duration play will happen, and long duration government bonds will start to outperform. So that's the second area of growth that we see. And the third is, of course, gold should start doing well, and I'll tell you about my views on gold in a while. But now within equities, we continue to believe that value will play out much better, followed by PSUs, because again, if the current government continues, the focus on PSUs is going to be very, very strong. And defense, railways, indigenization, all of these themes are being captured through the PSUs. PSU banks are in a good health. So all of that is going to play out in the next 5 years, and I would place my bet on PSUs. And the third theme I would play would be manufacturing and export related manufacturing more specifically, because there are enough incentives in place, and India has a competitive advantage with respect to many of the manufacturing related themes. So that's broadly, I would say, the landscape, the way we see it in the coming years.
Gold has been rallying steeply yet steadily since last year. What sort of returns do you foresee in the yellow metal?
So we've been positive on gold more because we look at gold as a proxy, or rather a replacement for fixed income. And with the government and especially the RBI coming out with gold bonds, where there are tax incentives if you hold it for a long period of time, there are There is an interest component also which comes into play, and also the fact that gold, we believe, will do much better than fixed income. We recommend a certain allocation to gold. The added advantage of gold is that central banks globally are stocking up on gold, and especially China. So China and India, both from a central bank point of view and also from a consumer point of view, is a big factor when it comes to gold. And also uncertainty is something which plays on the gold prices. Also inflation, global inflation, US inflation, dollar getting stronger. I think these are all factors which are give you that added advantage when you invest in gold. So from that perspective, we believe that gold should be a 10 to 15% allocation on your portfolio, and I think that's what we've been maintaining, and that's what we continue to maintain going forward.
Despite the volatile situation in the Middle East and Ukraine, crude has been reasonably under control. How do you see the situation moving in the coming months?
I think the way the world is shifting to renewable energy, I think that kind of puts some pressure on the prices of crude. So you have nuclear, you have wind, you have solar, and there's a whole lot of electric vehicles which have started coming in, which to that extent reduce the consumption of crude. So from that perspective, from a pure demand supply perspective, I think there is going to be some amount of pressure on crude, but at the same time, it's a commodity which is determined largely by the OPEC. They effectively decide the prices. So from that perspective, we don't see anything, anything happening as far as crude is concerned. So might expect prices to be range bound for the next 1 or 2 years.
In your interview to HT Mint last year, you had indicated the rise of mid caps and small caps, which turn out to be right. How do you assess the situation for those stocks are as of today?
So we continue to be bullish. In fact, we have kind of been nudging investors to go below mid caps into micro caps, into nano caps, because as far as this current government is concerned, they are pushing. They have a bias towards SMEs, and a lot of SMEs are. If you see the history of the SME exchange, a lot of SMEs are seeing a lot of interest from investors, and the number of listings on the SME exchange have also gone up. So while there is you can say certain amount of skepticism in the mind of investors, saying it's a very liquid exchange, there the prices could be determined by a very few handful of investors could be determining the prices, but we still see a lot of companies out there which have listed on these exchanges which have a very long runway. Some of the sunrise industries are there, some of the new tech kind of companies are there. So there's very interesting opportunities which are there in the SME exchange, which we've been nudging investors to kind of have a look at. Now liquidity is always a concern there, but for HNI investors, I think that's an area where you could start seeing some interest coming in. I mean, I look at SME exchanges as the NASDAQ of the 25-30 years back.
Portfolio valuation is an important exercise for investor. How often do you think should investor carry out this?
So we believe that every quarter the portfolio should be reviewed, and that's the practice we follow at Emkay Wealth. For all our investors, we ensure that their portfolios are reviewed every quarter, and I think that kind of would set the benchmark in terms of how often a portfolio should be reviewed.
Being in a wealth management business, what will be your advice to the beginners and the new entrants in the market?
A lot of investors look at past returns and come into the markets. What we would advise is not to do that. At any point when you're entering into the market or looking at the market, or you're putting additional funds into the market, you should look at what is the situation at that point in time. Markets are always forward looking, not backward looking. So to that extent, one should always speak to their advisor and try to get a view in terms of what's the best way to enter the market. Mutual funds, SIPs, I think that's something which has been said a lot about, and that is also something we tell our first time investors when they come into the markets.
Rapid fire round. One word to describe.
Okay.
Equity.
Buy.
Mutual funds.
Safe. Safe.
Bond.
Duration play.
Treasury.
I didn't tell you.
Global market.
Buy.
Gold.
Buy.
Crude.
Nothing.
So Ashish, thank you for your time. Thank you for today here.
It's been a pleasure.
So thank you everybody. Please like and subscribe.